Delay. Now, that's where your internal structure comes in. I know I told you the 4 hours time frame mostly is for your external structure. Without the internal structure, you won't have known about market have definitely changed from here, giving us a change of character to the upside. And that internal structure make us know see market don't change. This change we will see now for these 4 hours now. It don't first set from 15 minutes time frame. And there that 15 minutes, and there, now the change for start. Don't be this 4 hours now we will see now. Now here for start. Because for market don't break out from this low, I will see an impulsive move, which shows that bro, market dey go up. And maybe if you understand this, you can be able to catch that move. You could just catch the move, sharp sharp. Instead of because they wait until market break out from this side, you don't they collect this, you don't collect this one, take profit, collect this one, take profit, collect this one, take profit, collect this one, take profit. But now you go call they wait, hey, say okay, market don't change. You call it look out for buying. We are not buy almost 4 times to 5 times. That's why all those basic market structure no go help you. E no go carry you go anywhere. Those basic market structure, e no dey carry you go anywhere. If you no change your mentality on the market to understand wetin market dey do deeply, my guy, and see wetin dey happen for BTC. The same scenarios happen on BTC. If you look at am for BTC na 1 hour we take dey operate for BTC. 1 hour na we take dey operate for BTC. Now let me wipe out this. If you look wetin dey sup now for BTC now, the first thing we go dey ask yourself, market structure is very important. That's why those components are very important. But one, internal and external structure. Anytime you are dealing with market structure, know those components. Let it be in your memory. External and internal structure, that's the first step. Now the question is, where is your external structure? Where is my internal structure? Your external structure always lies at your higher time frame. You can use 1 hour or 4 hours, depending on the market movements in that time frame. In BTC now, if I'm to use 4 hours, 4 hours is not clear for me. If I'm to use 4 hours in BTC, I'm not that clear with 4 hours. But if I use 1 hour, I think I feel more clear using 1 hour to 4 hours. That's why you can use any time frame, but look for the one that have clear market sentiment that align with the markets. Now, 1 hour is more aligned with the market for me. Why? Because we see a break of structure here from the downside. Pay attention. Apply because a pullback, and we see another break of structure here, the downside. Now, ask yourself again, this is the external structure now. This is your 1 hour external structure. Ask yourself this question: where is your daily range? Where is your daily range is important. Daily range and external structure, they be like 5 and 6. They waka hand in hand. Then we can advance market structure, dey important. Now, where's your daily range? This is my daily range. This particular high. Yeah. This particular high here. And where is the low? This particular low here. This is my daily range. Now, why did I mark out this daily range? Because that's where everything I'm looking forward to is in this daily range. That's why I must mark it out so that everything you are looking forward for, liquidity, break of structure, market structure sheet, change of character, everything I'm looking forward to is within these highs and low. That's how daily range is important. It's within your high and the low. Now, if you mark out your daily range, fine. Now, if I'm to sell this market now, using 1 hour time frame, where will be my order block? I think my order block will be somewhere here. If I'm to sell this market using 1 hour time frame, okay, order block will be somewhere here. And as you can see, here is like I will say this is in liquidity, but this is not a valid break of structure. This break of structure is no valid. This is an invalid break of structure. But if you go to your lower time frame, to your 15 minutes time frame, what do you see? Or 5 minutes. That's why the internal structure is important though. If you go to your 5 minutes or 15 minutes, what are you going to say? What is this? It's valid. A 15 minutes time frame is valid. Why? Because number one, there's a liquidity sweep. Number two, there's an impulsive move and break up on the previous sweep. So this break of structure, according to 15 time frame, is valid. But in your 1 hour time frame, it's invalid. Now, what are we going to do in this kind of scenario, in this kind of situation? If you find yourself in this kind of situation, in your lower time frame is valid, but your lower time and your higher time frame is not valid. We don't forget as a trader that the higher time frame, the external structure, eh, is the restructure of the market. The lower time frame structure, they are what? They are noise making. They are noise making. Anything they have for internal structure, 15 time frame, now noise maker. Not be the restructure be that. The restructure is the higher time frame. Higher time frame is important. Now, but sometimes market might align with the 5 minute time frame or 15 minute time frame. Sometimes it happens. Sometimes market will not come back to this other block. Make it just continue the set from 15 time frame. Make it come back to this other block like this. Like this now. If you look at it now, this will be our other block. Let's say this is our particular zone here. We might likely be our liquidity. And here will be our other block. According to 15 minutes time frame. Here's liquidity. Here's other block. Now let's track it down. 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 You see. Wait down. You said though. What it means it's a bearish engulfing. You just said. Put your stop loss in. Now let this low as take the reference. Now let's see what happened. Let's see what happened. Price first go your way. Price first go your way. After I go your way, what happened? It take you out. Why? Because this is the internal structure. The external structure is the most important thing. They are noise making. Sometimes market feel respect them. Mind you, sometimes market don't feel respect them. But this internal structure now 50-50. That's why you must pay attention to your higher time frame. This was saying, now wait till up this morning. Now wait till up BTC. Now, what is up? Why is called breakout? And if you look at now, from the lower time frame now, it have given us what? A change of character. For price to break up from this low now. This is what? A break of structure. This is another break of structure. And what's happening? Price continue what? Going on. We have another what? Break of structure. They see, oh, market don't go up. Oh. Now, you don't forget, say, market. During your daily range, the market is what? It's still downtrend. That's why your daily range is important. Forget everything they saw. Market still dey down. Because your daily range is still dey show you say, I dey down, see the high, see the low. So for market now break out from this daily range, market still dey down trend. So despite everything we market do for a 15 time frame, we start to go up from there. E go up. You see am, e go up. Fee. Price come out to this other block. So around this zone, e start to dey buy. Fee. Here na liquidity. You see am? Here liquidity. You sweep liquidity, you come out to this other block, you buy maybe somewhere around this zone. You buy somewhere around this zone. You buy after I see multiple rejection, maybe you buy somewhere here. You buy, you put your take profit here. And what's happened? Price go your way. And what happened again? Price goes another break of structure. Okay? And we see that this is an impulsive move. We see another block somewhere here. We can mark out this particular entire zone as our other block. We expect price to come back there if possible, but price never come back. Right? Price never come back. Price never come back. It continue going up. But when price continue going up, now what do we notice? We notice that price which was already placed, it started to go down. Now this is your other block now. Where you drop for here. See, price break out with an impulsive move. See, why? Because from the higher time frame, market is still downtrend. So what happened is that market come back to this daily range, it sweep out this liquidity because this is daily range. It sweep out this liquidity. After sweeping out this liquidity, it gives us some rejection. And what happened? Price continued to go down. But to our surprise, what make me I collect loss yesterday because I know say once market don't break out from this high, this market, once it don't break out from this place, means say market don't change. Once market don't break out from here, it don't change because I don't expect market will go up again. Because when I see this is possible, I don't expect market will come here. Some people tell me the market will come here, come fill up this place before you continue going there. I lie. I no expect am because when price super liquidity, see impossible move, see impossible move. So when price come here, you see advanced market structure, my guy, e dey important. You know wetin carry me collect BTC loss yesterday. If you no understand that, my bro, you go collect loss tire. I say when price come here, wetin sup for BTC now? Wetin sup? Price need to go down. We don sweep liquidity o. We don see this impossible move, so e don fill up this fair value gap. You know, say fair value gap, wetin dey do for the market? E be like magnet for the market, fair value gap. So e don sweep, e don refill all this space. Come even sweep out liquidity because that liquidity na give am energy wey market fit go down like this. Because for market to go down, e need energy. Na make liquidity dey important. E sweep out external range liquidity. This is an external range liquidity sweep. E sweep am out, come start to dey go down with an positive move. But I got surprised the market come back here. E start to dey go. When the mistake for come, when market reach here, now let's go to 15 minutes. Can show you one mistake now. I think it's more better in 5 minutes than 15 minutes. I think it's more better in 5 minutes. But it's still the same. Yeah. I can use 5 minutes, I can use 15 minutes. Now, what is up? If you look at now, when market started, when you sweep out that liquidity now, you sweep out for me. This is the last bit of structure of the market. Initially, this is the last bit of sell. Before that liquidity was swept, price sweep it out. And what happened? Price was able to break out from that low. This is the low. Quick was a change of character. We already choose the market they go down because as market does sweep liquidity, you know if you just sell immediately. For you to know the market already go down, go give you change of character. Market give you. It give change of character for you. What is up? Market go p p p p p p p p p see p p p p p p. It come back. Okay, 5 minutes. That is why I say 5 minutes good. Make I 5 minutes. 5 minutes go this street. Back to 5 minutes because 1 hour. Let's say 5 minutes. 5 minutes will be better. I want to show you something new. Because when price just sweep liquidity, external liquidity, don't buy immediately. Wait for a change of character. When price just sweep out higher time frame liquidity, especially external range, this is an example of external range liquidity. Higher time frame, this liquidity get power. It get power. No liquidity get power. Which is liquidity? What happen for you? Now make I see this impossible move we see for you. It get power. It get power. Now when price about liquidity, I go to my 5 minutes. Let's go to 5 minutes. Now, this is the liquidity sweep. Let's chop it out. I want to show you something. This is the liquidity sweep. Now, this is the liquidity sweep. This is the last big of structure of the market. This is the last big of structure. Price gives us a pullback in 5 minutes time frame. It gives us a pullback and continue going up after I fill up this fair gap. It start going up for me. Now, what happen? As they go up, it no call break. It no call this high now. No call break this high now. No call break this high here. Because if you look at before, this one, it break this one. This one, it high by this one. This one, yeah. But in this case now, when price come back down, this high no come high by this one, which shows that there's a change in the market. What happened? Price give us a change of character in particular zone. Now change of character will come. The first change of character, it gave us change of character after sweeping before after the liquidity was swept. And what did we notice? I now see that we have other block. Another block is here. It's another block. And here will be liquidity. And we also have a breaker block. So a mitigation block. A mitigation block to be somewhere here. It's a mitigation block here. Now, what is up for here? You see? If you say after I sweep liquidity, it gives us change of character like this. I want to show something though. Pay attention. It gives us change of character. It not to go down, like it just gives us change of character right here. Because after they go up like this, price go come back to this other block and go sell. But anytime when market they sell, when market give you change of character, it just continue to sell immediately without giving you instant pullback. Focus on your change of character, focus on your mitigation block or breaker block. Anytime when price give you change of character, it come back immediately, it go mitigate it to your other block. But anytime when market give you change of character, it not come back immediately. You see impossible move like this. Just know see this other block, price never come back. What's happen? Price come back to this breaker block. Sorry, mitigation block. Why is it mitigation block? Is because this particular zone is a fade order block that refers to hold. If say market break up from this high now, Now this place then go be our other block, this particular zone. It's market breaker from this side. But based on market don't break out from this side, here, this other block, it don't fail because market don't break out. So market break out from that other block. Now, as it break out, it become our what? Mitigation block. Now what happened? Price come back to that mitigation block. Eh? Eh? Price come back to that mitigation block here. Eh? And start with I start selling. Ah, boy, he come back to that mitigation block. Eh? See the guy say we say. See the no wait. See, I dey show something here. But me I tell you, see for marketing, it gets block who take the trade the reversal. It get block who take trade continue. These two things are two different things for the market. There's a reversal, there's a reversal trend, there's a continuation trend. Like what happened here when price gives a change of character, this is a reversal trend. When price give you a change of character, this is a reversal trend. So during the reversal trend, your focus should be in beta block, BB, and mitigation block, MB. During a reversal, most of the reversal, especially in your higher time frame, your focus should be on breakout block or mitigation block. But during a continuation, when prices continue going up, like this now, this is a continuation trend. Price is going up, breaking out structure, breaking a structure, breaking a structure, continuation trend. So in this kind of scenarios, your focus should be in order block. Your focus should be in order block, OB, or fair value gap. OB and fair value gap. If you are looking for continuation trend, you want to buy continuation trend. But sometimes during change of character in a lower time frame, market fit expect other block. But whenever market don give us a positive move like this, my guy, don't focus on other block again. Focus on bigger block. Na market go take sell. And na wetin market use for him. Market sell from there. He sold out. Bing. Now, he now break out from this structure. Could give us about another break of structure to the downside. Market give us another break of structure to the downside. Now, wetin cause so? Market come back here, it give us like a little pullback. And what do we see? We see like a little break of structure here to the downside. And so on and so forth. Market come back again, give us a pullback, and we see another break of structure here to the downside. And what do you see again? This become our order block. This particular zone become our order block here. Market come back here, we started selling. And what do you see again? Break of structure again to the upside. Now, where will our order block be? Our order block will be somewhere here. Here will be liquidity. And here should be our order block. And wetin happen? Market no expect the order block. Wetin happen? Market break out. It break out. It break out. Now we can as market don break out, wetin happen? E don give us change of character again. I no suppose to buy again. I no suppose sell again because change of character don occur. But me, I still dey sell. That's why you must understand internal structure as well as understand external structure. Because the only way you can be safe in this market is to understand both of them very well. That's why advanced market structure e dey important o. See the way I dey explain am one after the other now. Because for me, after that because this thing occur, mitigation block, see the kind sell we say. E sell go down, e give us another sell again opportunity for here. E come to this other block wey dey start to dey sell. E give us another opportunity again for here. This other block na supposed to be our other block here. No be even this one, because this one don mitigate. This other block has been mitigated like this. So our new other block is somewhere here. This is our other block. So price is our liquidity. Price does not respect it. And it give us a change. Now from there, I for comot eye for BTC. I for comot eye for sweet. I can see they look at percent. Why? Because I dey pay attention to 15 minutes. Let me can tell you, say, understanding the market sentiment, both in your higher time frame and lower time frame, dey important. Because one market don change, you go quickly know than anybody. This BTC, see why BTC for change. Now from here, now it will start to dey change. Before we see am for 1 hour, the same thing will happen for you. Now, this BTC don change o. BTC just dey buy because why? Market don break out from this side. I believe so. Market has broken out from this side. Now, BTC is no longer buying, selling, no, than buying. Just like EU now. BTC have changed from what? A downtrend to what? Uptrend. BTC have changed from a downtrend what to uptrend. That's why advanced market structure is important. Because without it, you won't, but the changes start this from here. The changes started from here. The changes that happen now, that we are seeing right now, it started from here. So with the advanced market structure, you can be able to spot it out early before any other person. But in your basic market structure, you have not been taught. All what you have been taught is higher high, higher low, lower high. I want to know all these things now. So before anybody the market don change, now you go first know. Na make advanced market structure dey important. You go know before anybody. You go know before any see BTC now. E dey go up, e dey tear, dey go up. Nothing like down again for now. Just for comot mind for down, stay one side BTC, comot mind for there. Just dey buy. And the same thing will happen for you. The same pattern. Advanced market structure. You see, if the apple gold sef, I say that dey happen for gold again. Gold. This gold now, I see markets now, I don't even understand what it is. If you look gold now, they say almost the same thing. Where is the trading range? Now, because everybody has to set every time. Because at that trading range now, that will determine what will happen for the market. Say the gold is downtrend. Boss, I beg, we face concept advanced structure. Okay, the concept of advanced structure. Number one, internal structure and external structure. Number two, break of structure, change of character, market structure shift, displacement, liquidity sweep, inducement. You can call it order flow, daily range, reversal logic, and trend continuation. But that one will still be like order flow. Internal and external structure, break of structure, liquidity sweep, inducement, displacement, trend continuation, and reversal logic, which is order flow of market phase. All these are advanced market structure components. Liquidity sweep, internal and external structure behavior, inducement, break of structure and market structure shift, displacement, and market phase. Now, if you see gold now, if I ask this question now, at what direction will gold dey go? Is gold going uptrend or downtrend? Who can tell me the direction? That's why advanced market structure dey important. If you no know advanced market structure for this market, you no go know the direction. At what direction do you think gold is going? Is it uptrend or downtrend? Comment below. But I bet you fast to liquidity sweep, trend mechanism. You can call it trend mechanism, which is a trend mechanism, external and internal structure behavior, inducement, break of structure, change of character, market structure shift, displacements, and market phase. So it's an uptrend. Gold na uptrend. Now let's check it out. We go know with the help of advanced market structure. I can't determine any trend without the help of advanced market structure. That's why it's very, very important. That's why it's important for me. Now, according to our advanced market structure, if you look at gold, let me delete all of this. Check out the trading range first. If you want my mentorship for this December batch, you see how we're not privileged to register. I don't want to partake on the December class initially, but I thought because of a lot of people who have come to me and they were like, boss, now what you will get, I beg, help us. See, they want still learn them. So you can still be part of this December mentorship. That's where all this information will be passed most of the time. And I will explain it more details. Though I'm trying my best to explain it more. So this is the daily range of the market. That's the first step all the time. Where is the daily range? That's the why? Because this particular zone is the last peak of structure in gold. This is the last peak of structure that occurs. And that's why we mark here as our daily range here and here. There is no break of structure here. There is no break of structure here. All these are fake break of structure. If you go to your 15 minutes time frame, there might be a break of structure. If you go to your 5 minutes time frame, now let's go there. In your 5 minutes time frame, that place is the break of structure. So, no, they want use. It's a break of structure. It's a break of structure. See, in your 5 minutes time frame. But in your higher time frame, it's not a break of structure. That's why I say the 5 minutes and 15 minutes, they are noise making. That's not the real structure. They are noise making. Now, this is our daily range. Let's go back here, which happened to be the last high for going down. And I noticed something here. This is the last high. When price is going down, it gave us what is this? It gave us like what? Evening star, signifying that it's going down. Another thing is this is sweep liquidity. It's sweep liquidity before going down. That's why the selling momentum were very high. See, this small thing we have for you, so let make sellers get power where they get to. This small thing we have for you. Now, because of this small thing we have for you, let make sellers be like say they get power for Google. This is what we call liquidity sweep, external range liquidity sweep. It's important. Nothing can play. You have for BTC. Sure. Those things, nothing can play. See for you. Now, anything makes BTC start to liquidate at the it dey happen, but in different way. If you see BTC on, it dey obvious. But for gold, e no dey obvious. E happen, but be like say e no happen. Because this is the last high of the market. When price is going down with an evening star, it give us a sweep. And then it goes out to the bigger. So now, normally, here, now I order block. Here is our order block. Because it's really an impossible thing. Here is our order block. So what happened? Price come back, mitigated rate, look as if it's going up. Look as if it's going up. Now, this is the mitigation. Before you buy, make sure you see a change of character. Even when price come out to your order block in 1 hour or 4 hours, make sure you see a change of character. Now, let's go to 5 minutes. This is the mitigation. This is the mitigation. Now, what is the change of character? And if you look at it, this is the last low of the market from the internal structure. This is the break of structure from the lower time frame. This is the internal break of structure, which is the last low. And what do we see here? Price was not able to break out from this side. And if this eye was broken up, this could have been what a change of guard. But what happened? Price was not able to break out from this side. Which was not a liquidity sweep. And after liquidity was sweep, what do we see? Price continue going down, breaking out from this low. If na me, I don't see this kind of thing, I go just say, I don't see this kind of liquidity sweep. And I go see, what is this? I go see what be this? Evening star. What are they waiting for? I see liquidity sweep. Because this is an equal high. Liquidity sweep, evening star. Say, now buy, I won't buy before. But why? Because market buy momentum, no high. Because of waiting happen for a year. And because of that small thing, waiting happen for a year. Then we can buy momentum, no high. And the liquidity sweep, it dey give price energy. Now what happened? Price was able to sell and was able to break out from this high. It was another what? Break of structure, the downside. Now, what is up again? Price come back. Here will be our liquidity. And it's somewhere around this zone here. I think somewhere around this zone here should be our order block, if possible. And what will happen? Price come here, feel. It not give us enough buy momentum, it sweep out. And which is all. Now, if I want to talk now for this market now, for gold, my guy, I feel assure you, there are a lot of sellers in gold that are buying. The only way I can tell you that gold is buying is until gold price eventually break out from this side. A market no break out from this side with the gold no dey buy. Until this side is taken out now, I'm not believe that gold is buying. Because The way this market dey go so, if you no take time, my guy, gold, gold fit later come like this, break out from this low. Gold don change market sentiment, but we dey wait for confirmation. But mind you, gold is high. Gold get strength. Gold get strength pass USD. USD don dey lose strength. They don dey lose strength. So there's a lot of possibility that gold might likely go up. There's a lot of possibility because normally USD don dey lose strength. Wetin make am be like say one sell na because of this selling momentum wey sweep plenty people wey sweep for here. To buyers now, for buyers to go up now, they need enough liquidity to be sweep before the market fit go up. Na wetin buyers dey try look now. Now, before I go buy, I go make sure say buyers push the market to break out from this high. If I'm to buy good. If not, I no go buy. Say downtrend. It might go down. We have no conclude yet. Market don't be like say they go down, but no conclusion yet until this low is breaking out. That's when you can have, just like what's happening on EU now. Until this high is breaking out, that's when you have conclusion. What happened on BTC? Until this high is taken out, that's when we know that market is going up. So gold now, the low have not been breaking out. So there's a lot of possibility that market might likely go up or down. It's like consolidating. That's why I said before you sell or buy, make sure price break out from this side if you have to buy. And if you have to sell, suppose don't sell. As market don't come in. As market don't come in, suppose don't sell. They give us this impossible move. But at the reason I say, if you don't sell, because you're supposed to sweep out all the liquidity before you go sell. Supposed to sweep out all the liquidity, like sweep out this high, you know, before you go sell, but you know, sweep out. So it's just like consolidating for me. For me, if I want to sell, I'll allow this low to be taken out. And if I'm to buy, I'll allow this high to be taken out. But for now, I will just stay naughty. I won't do anything on good until this high or this low is taken out. That's how you must understand advanced market structure. See, guy, if you see, you know how they talk deep, it go make you understand what they happen, something is so for you don't go to fear. Now because if you look me, now look for pace, me for focus on attention. My attention, I don't want, you see, like what happened on, I think BTC, that was on Monday. BTC give me 3 setup. I see 3 setup. I missed 2, I enter 1 for BTC. I think on Monday, something like that. 3 setup, I missed 2, I enter 1. Or I missed all the 3 setups. Because yes, but I think I don't pay attention to that BTC on Monday. 3 different setup. One day, one day. So if you understand advanced market structure, it's going to give you setup every time. You know, if setup go day for you every time, you see setup. Let me you need to understand that. Because it will teach you everything about the price movement. From the internal structure, from the lower time frame, the noise making, to the risk structure. So if you want to join my mentorship coaching class, you still have time to be part of my family. That's where the information will be passed mostly. And I will break it more down for you because, bro, I'm not gonna lie, I don't teach everything. No matter what, there's no time. Only this class alone, this class alone cannot guarantee you that you already know it all. So if you want that mentorship coaching class, send me a DM. I will respond to that. If you want a copy of my book, you still have time. You can have my book, it's still here. And I said I'm working on a new one. I'm working on that new book, but it's taking me time, but I will surely do it. So if you want my mentorship coaching class, you can send me a DM so that we can meet up on this more. You see this advanced market structure. This is our base. How much is it? Send me them. That depends. We have different class that comes with different benefits. We have the foundation class. In the foundation class, we are going to learn every single thing about trading, from the fundamental analysis down to the technical analysis. But at the end of the class, we are not going to give you certificates. Why? Because we believe we can learn trading within 1 month. Does this advanced market structure? The components with the advanced market structure alone. 1, 2, 3, 4, 5, 6, 7, 8. 8 components. And those 8 components, now big topic on their own. Like number 1, displacement now another topic on its own. Inducement, we have different type of inducement. Liquidity, we have different type of liquidity. Market phase, another topic on its own. So components with the advanced market structure. Now big topic on their own. So no learn that for 1 month. I don't lie you. But the 1 month class, na $95K, $95. If you want to access the 1 month class, For the 3 month class, you are going to learn every single thing about trading, from the fundamental analysis down to the technical analysis. And also, we are going to develop a particular strategy that works perfect, just like my strategy, the wise money concept. That's my strategy. My strategy is just advanced SMC. If you look what they teach, everything now advanced SMC they teach. Now what they focus on? I need to focus on this higher high, higher low, higher high, all this one are basic of this thing, the SMC. So we are going to teach you the advanced one, and also in this class, we are going to educate you on risk management and money management. These two things don't be the same. No? If you want grow your capital from $50 to $5,000, not be by flipping, no, and by money management. So if you want to understand money management, I will educate you for this class how to grow your capital through compounding. We grow it by compounding. There's something we call compound. You're compounding your profits. Compound. Now, what here I go use compound through compounding. Now we say they grow our money, not be through flipping. If you flip your money, go collect loss tire. So we are going to educate you in this class, and also we are going to educate you on psychology and how to be disciplined. And at the end of the class, there will be a valid certificate that will be given to you. This one is $238. I think the flyers are here. I will have shown you the flyers. $238 for this one. $238. $238 for the advanced class. And if you want the private class, one-on-one mentorship with me, that one is quite different. That might come along with some benefit as well. Let me show you. Maybe I can see it. I will have shown you. Okay, this is it. Let me show you before the live stream end. So let me show you. So we have different one. This is the 1 month class. This is the 1 month class. This is the 1 month class. It's $95. This is the 3 month class, which is the advanced class. Where is it? The 3 month class, which is the advanced class, is $238. And you have issue certificates, live section of trading, psychology and discipline, risk management. And this is the private class,